What's up, everybody? This is Jimmy with Trading Decoded. It is April 30th, 2024, and it's 4:03 in the afternoon. Day before FOMC day, and I can't help to think that maybe some information was leaked prior to tomorrow's reports. But there's only three outcomes for tomorrow, and they're either going to keep rates where they are, which is what I expect to be the case, and they may announce that they're not going to do any rate cuts this year at all, and maybe the market is accepting that now and started its sell-off, or they're going to come out and say, and very unlikely, we're going to rate hike, which would be epic if you're playing the downside, or they're going to come out and say, yeah, we're just going to keep an eye on the data and play it by ear, and the market will probably still price in maybe one cut this year instead of two that it's currently expecting. Either way, we try and play the chart for what it is, which leads me to admission of being a little too aggressive can potentially cost you money. How do I know that? Because, well, not only do I see people do it all the time, but I myself did it. My very first trade of the day, I ended up taking almost a 31% loss simply by being too aggressive. And I'll explain to you what I did. It cost me $1,400 to be wrong, cost me $1,400 to be aggressive. But I want to show you what my thought process was, okay? Where I made the mistake, why I made the mistake, or no, I don't know why. I just was trying to be aggressive and it cost me money. But I'm going to explain what my thought process was, and then I'll show you, had I just been patient and done what I said I was going to do, I'd have made money. But until then, let's go. We had reports come out at 8:30 this morning, which basically was saying that the cost of employees is higher than expected. It's not a surprise, and that's not good for inflation, obviously, because as long as cost employees are going up, so too will the goods that they're selling, right? It's just how it works. Which begs the question, are we going to see a wage price spiral potentially? I don't know, but the Fed better crash unemployment pretty soon. Otherwise, they're going to have a problem on their hands. Or if you're like many people out there, including myself, the economy is not good. And whatever they're doing to make it seem like it is, I think fewer and fewer people are falling for it. But without that, we have our pre-market lines down here. They exist down here because I drew them after the report. Very quickly, we started to put in higher lows. This was number one. This was number one for my mistake, okay? At open, we were pushing up on ADD. No, ADD was dropping hard. Let me open that chart real quick. ADD was selling off hard, okay? That doesn't get me into positions. What gets me into positions, or got me into this one, was the Qs failing to move higher. Now, while I was contemplating, so let me first go back. Our call line was a break above 508.77, so long as Qs weren't at resistance. Put line was a break below 507.93. Hoping for a move down to 507.7, or expecting the move to 507.71, hoping for 507.25. Okay? Mistake number one. I was watching the Qs chart saying, hey, I like the wicks on the tops of these candles. If Qs can close below 430.92, I'd be good to go for puts, looking for at least the move down to the pre-market midline. ADD was already letting me believe that the momentum of the market was going to be in my favor. I just needed Qs to break support. Well, guess what the Qs never did? They never broke support. Guess where I bought my puts? Right here on this second candle. Called it out in front of God and everybody. Said, guys, I think I'm going to get in my puts aggressively here. But before the market even opened, I told everybody, put line is down here, call line is up here. If you're going to be aggressive on your puts, wait for at least this green trend line to break. Yes, I drew this trend line before the market opened. Do you see a break of the line? No. Do you see a close below support on the Qs? No. Do you see that I lost $1,400 because I was too aggressive and not patient enough to wait for those two things to happen? Yes. I wear that loss, not proudly, but this is why having a trade plan and following your plan is so important. Exercising patience. Okay? But because I didn't get out of that put until the Qs closed above this line of resistance, wasn't that line, it was this line of resistance. I decided to take the loss. Okay? I took the loss. Qs closed above resistance. That was my stop loss. That's it. Okay? So I lost $1,400 on that trade. But because I was in that trade, I couldn't get into the call line scenario, which we got here. Now, if you look here, we did breach this line as early as 934, but Qs were up against resistance at 934. You don't want to be getting into calls on SPY when Qs are at resistance, okay? Qs broke that resistance at 940. SPY finally broke that resistance at 940. You got in, you ran up to the next line of resistance. It paid. Not me, but it paid. We started to chop around, created a channel here. Okay, we stayed above our call line and we were bouncing between support and resistance. Okay, Qs were doing the same thing. And just, if you played the channel, you played the channel. Otherwise, you waited. All right, we come down. Now, people are asking me, Jimmy, when would you play puts? I said, well, I wouldn't play puts unless we can get back below that very strong line of support at 508.77. And if we did, I'd be looking for the move to get back down to at least 508.45, maybe. And if it gets through that, we'd go down to the blue line. I wouldn't hold through the blue line because that's this line on the Qs. It hasn't had a good success rate of doing that. It burned me once. I wasn't going to let it burn me again. At this point, ADD is starting to make its move back to the upside. Still very red on the day, though. ADD stayed in the very, very negatives the entire day. Opened at minus 1,300, got as high as minus 1,100. And then it just kind of fell throughout the day from there. Okay, so ADD, the market never looked strong. But if we're going to play support and resistance, we kind of got to go with support and resistance. Okay, the second trade I took today was we bounced off support here. We closed back above the call line. Now, every time we got above that line prior to this, we made it up to the yellow line. Every time we come back down and touch that line, we made it back to the yellow line. Down, up, down, up. So I'm expecting, if we get through it, we're going to run to the same resistance. I took this trade here at the call line looking for the ceiling. The resistance, the same exact trade as we talked about in the morning. Same opportunity. Uptrend, breaking resistance, looking for the next resistance. That was a 30.4% win. Okay. Now at that time, I was still red on the day by a lot less. Okay. $400. And then we started to come down. And while we were coming down, of course, for the put line scenario, we need to get below this level of support. Okay, we need a close below 508.19. If you're waiting for the put line, you need to close below that line, whichever one you took. I personally got in here when we closed below both support and support here. I had told everybody this morning, I'd be interested in puts through that line looking for the pink line. Okay, I got in because we closed below the low a day support, stayed below resistance here, hoped for the move to continue down. Once we got below the put line, she just free falled straight down to and through yesterday's low of day. That was my last trade for the day, personally. Now, we had some people hold on to that for much, much longer. That right there, from here to there, was an 88% win. And then it made it well into past 100% on that same move. All right, but the pink line's the stink line. My original plan all the way from pre-market was if we get through the put line, I'm looking for the pink line. Okay, that was still my plan. And that ended up making me green on the day. Then we were having pullbacks during a downtrend. Okay, pullbacks during a downtrend. And we go to this chart here. Now, the split chart, hold on. You can see oftentimes where Qs and SPY were pulling back to resistance at the same time. So you had Qs pull back to resistance here, SPY pulled back to resistance there, Qs made it back down to support, SPY made it back down to support. And then you had a pullback, but this Qs wasn't at resistance here, neither was SPY. I guess if you're looking at old support to be new resistance, potentially you had that. But then later in the day, and again, I don't trade this late in the day, but I just want you guys to see Qs had resistance here. It held and it dropped. Held, dropped. Then we got into resistance again. Same old support, new resistance. Here, dropped hard, really hard, and made it all the way down to its last line of the day that we had down there. SPY made it all the way through its line of the day and continued down. So today didn't start out great for me, and all of these were levels of Qs hitting their support resistance lines as we were moving down. So even though we don't have entries here, buying pullbacks during a downtrend to resistance is the best time for entries. And now all these white lines here, are levels of support that we created during this move to the upside. Okay, I was just trying to show everybody who were saying to me, Jimmy, would you play puts here? Would you do this? Would you do that? Would you do this? Would you do that? No, because this is how I see the chart. I do believe that if we can breach levels of support, we'll make it down to the next support. The problem is I don't assume that each one of these levels of support is going to fail. I assume they're going to hold. So if there's not 20 cents of potential movement between line A and line B, I can't take the trade. And I don't trade this late in the day. However, there are people who still trade late in the day. I can't bring myself to do it, but I can tell you where potential opportunities would be. Well, here at 238, check out Qs at 238. Okay, Qs at 238, pull back to resistance, down to support. Pull back to resistance, down to support. We had a member in that trade, so I was trying to help them get down to the next line. It did that. And then we just started to really sell off. It was a crazy day. But bottom line is, guys, have a plan. Be patient. Sometimes aggressiveness will get you a little bit more on the winning side if the trade goes in your favor. But if you have a rule or a plan and you choose to deviate from that plan because greed is creeping in on your decision making, just be prepared to get punched in the face sometimes. Today, SPY punched me in the face. All I had to do was wait for a candle close below on the Qs. It didn't give it to me, and as a result, SPY never broke this trend line and never moved down, and I ended up stopping out for a loss. Okay? But patience, waiting for the right entries for the right reasons, ended up allowing my red day to turn green. Okay? Again, we're coming off, holding a strong support at the time, moving up. We close above resistance. I'm expecting it to move to the next resistance. This is what we look for all day long. Just like if we close below support, we're looking for it to move to the next support. If it closes below that one, next support in line. And you can see often that we get to these lines and it reacts, right? So the yesterday's low of day, we tried to move lower. Buyers were there temporarily, tried to push it back up, weren't strong enough. Sellers brought it down. Once the sellers closed us below yesterday's low of day, we know the next line of support is down here at the yellow line. We'll look at where we went. Put in lower highs, higher lows. This is a no trade zone here. If we break the trend, if we break the wedge low, I'm expecting it to move down to 506.36. Guys, you got to be able to see this stuff. Okay? We broke the wedge low. We went to the next support as a result. Putting in lower highs again. That's when I tell people, guys, if you're looking at buying calls off support, coming off of lower highs is not the time to do it. I wouldn't. And inevitably, we come down to support, break through it, and move down to our next line of support. Once again, we pull back to resistance, looking for the same support. Again, this is a much smaller move, but a move nonetheless. If you're trusting the trend of lower highs, lower lows, you're getting in at the pullback. It's still a lower high. You're hoping for a lower low, which would bring us another leg down. If you don't get it, you always have the opportunity to get out at where the current low of day is. That's a support level. We had a line there from 8:30 this morning. And then we started putting in higher lows, okay, and higher highs and so on. And we hit this resistance. We never got above it. And then she just started to sell off from there. So there's things that can be played throughout the entire day. My particular trade strategy doesn't work well for me later in the day. So I tend not to choose to trade later in the day. If you do and you play next day expirations or you play cheaper contracts or in the money contracts, all of this stuff, by stuff I mean support and resistance, can still make you money. Okay, I just don't prefer to change my trade plan so that I can continue to trade throughout the entire day. That's not of interest to me. I'd rather get in, spend the least amount of time in the market and make the money that I need to pay my bills. And usually that happens in the first half hour of the day. Today, not the case. Today, I tried to make that the case and started my day off with a nice fat red trade. Okay, then you be patient, you wait for the right setups, and you take them when they're there. Okay, so with that, we're going to wrap it up. I hope you all had some good trades today. I hope you found some useful information in this video. If you did, please like, share, and subscribe. If you'd like to join our Discord community, well, we'd love to have you. It's free for the first week. And if you choose to become a paying member, I appreciate it. And you would have access that you get and more as a paying member than you do as a temporary member. If you choose to not become a paying member, you're more than welcome to stay in the community. We have a ton of members that are not paying, and that's okay. You just don't have access to the perks of being one. Still a lot of interaction in our regular chat rooms and all that stuff. It's a good place to be. It's a learning based community. We're not a call out service. We had some people that got a little uptight today when they found out that I took a couple of trades that were not called out in advance, although they're ignoring the call outs that we do in the morning about the call and put lines. But with that, guys, there were a ton of people that took the same exact 2 trades that I did because they knew what they were looking for and what they were supposed to be waiting for. They executed the trades, and I mean to the minute, at the same time that I did, and got out at the same place that I did. We had people get into the same trade here and get out at the same spot. We had other people hold the trade longer. Okay. The key is knowing why you're taking your trades. It's not, how can I tell when Jimmy's taking his trades? I'm trying to teach you why I'm taking the trades I take. And I also tell our members all the time, assume that I'm going to be taking the call put lines unless I otherwise tell you I'm not. Now, this time I was in a trade too early, so I couldn't take the call position. All right. And we're going to wrap it up. So thank you guys for watching. Thanks for hanging out with me. And be careful tomorrow. It's going to be an expensive and volatile day nearing 2 o'clock into the close. All right. So I love you guys. Till tomorrow. See you.